Morning, everyone. This is Brad Matheny, and we are looking at a Tuesday potential rally day. Now, let me explain this to you. Today is the 4th of February, and I talked about this yesterday, how I thought the markets would roll upward potentially and fill the gap. In fact, I think it was back over here. Let me come back into this. This is something I'm working on. Get rid of it. And let's go back to the SPY. Can't remember if I drew it here. Yep, this was it. So we talked about this yesterday about how we're likely going to fill the gap. If you take a look at the ES overnight, I think this will show it. Yep. So you can see we've moved up and we filled the gap overnight. Drag this over here. Come up, filled the gap overnight. We're generally a little weaker. We're getting a little rally mode here in the ES right now. Personally, I believe that we're going to try to move back up into this zone here, kind of moving back up into, like this zone, maybe the 602, 603 area on the SPY. Today as a kind of a rally phase in the morning, and then we're going to roll over, consolidate, and start to roll down into the 5th and the 6th. And I believe that's going to be a fairly common thread here. I mean, we've got a lot of news coming out with President Trump and executive orders and the Department of Government Efficiency going through and shutting down USAID yesterday. I guess everybody's up in an uproar. Apparently, people are rioting in the streets and the highways in LA over immigration. I mean, it's really kind of wild the way the world works. So, right now, we're looking at this broader kind of a context in the rollover pattern. And remember that we have that deep V pattern setting up somewhere around the 9th, 10th, 11th. So, really, when you look at this, if I were to come take a look at 4 hours, you can see the deep lows. You can see where we're at. And what I want you to be aware of is that, we have this rolling trend moving into this deep V setup, which is occurring around the 9th or 10th, right in this area. And I really do believe we're going to be looking at kind of a deep V low here and then moving into another deep pattern low around the 21st of February. So, if I were to estimate, what's going to happen is we're going to roll up into the 601, 602 area on the SPY. Again, find some resistance, roll back down, set up a low down here, probably in the 580, 585 area. In fact, let me go to the SPY because it's all right there. And there we go. Nothing has changed as far as my analysis. We're going to see how this plays out over the next couple of weeks and days. But we're rolling down into this double low type pattern right over here. And like I said, I think we're going to roll into this resistance channel. We're going to weaken through the next 2 days, peaking today right around 601, maybe 602. 602 and a half, and then roll back down into Wednesday, Thursday, Friday, and then potentially a big gap downward on Monday, maybe pushing down into this 580, maybe below 576 area. So we'll see. Ultimately, guys, we're coming back down to this low. Okay. I mean, really, I need you to understand that this low here is our ultimate low. Mark it darker. This is really where we're coming down to. Markets want to come down into this 576, 580 area off of this breakdown. At this point, we've got this excess phase peak in blue. We've got this excess phase peak pattern in magenta. I've drawn them both here. I've actually drawn this one a little clearer. So, you can see it here. Come back here. So we come back up to this peak. rolling on up to here and come back down into here. And there's our excess phase peak moving up into this channel. You can kind of see it right there. And that's our flagging channeling. We've broken out of it. This is going to probably roll to the downside, targeting that 580, 584 by basically the end of this week, early next week. And then I think we're going to be moving down into a deeper low. And like I said, I think we could be looking at this 560, 570 area on a super deep pullback. And again, you can see how I marked this going across these channels. I think we're looking at, a pretty good breakdown. Now we may end up stalling here. So hypothetically, as I've drawn this, this would be an extreme breakdown. Okay. But in reality, we could stall in this area. So I'll give you an example. We could move from the current areas, rolling downward, stalling in this area for a bit, moving. Let me do this again, rolling into this area, setting up our deep V, coming across, and then rolling down into this area, meaning coming down into this low and potentially setting up that deep low. So we could, kind of roll like this into this deep low, coming across here into this deep low, and coming back into this area. That's something that could happen as well. We need to see how it plays out. But ultimately, this 580 to 585 area that I keep talking about, this area right here, this is the next target I think that we're looking at, right in this area with this green little circle right there. And then I think we're going to try to find support above 577 on the SPY briefly, and then we're going to get that breakdown low. So, you're looking at basically, if I'm correct, from the peaking area up over here, you're looking at a breakdown of about 3.5%. I think we're going to see a 3.5% roll over within the next 5 to 10 days. So by February 10th, 11th, 12th, we're probably going to be down in the 580, 585 area, maybe lower. And that means you should be, really prepping for some opportunity for a breakdown mode, at least potentially down into the 590 area, below 590, 588, 587, 585, 584. You've got to be prepping for this from where we're going to be up here in the 60s or 600s. That's a pretty good roll. So let me come over here and show you the rally phase today. I think, like I said, we're going to recover up to about 601, maybe 602. And then we're going to roll. Tomorrow's rally mode, I think, is going to be very muted. I don't think the markets are prepared for what's coming right now. I think it's really struggling to try to hold up. In other words, the markets want to go up, but there's just a lot of uncertainty right now. So I think it's going to be kind of like, think of it like a running game between two football teams. It's going to be a lot of pushing and shoving for a couple of yards, really. Not going to be a whole big a big runner here. I think it's going to be a lot of pushing and shoving for 6, 7, 4 yards, something like that. Not too much big movement. Then we get the counter trend rally on Thursday. I think it's going to be a breakdown mode. And like I said, carry over and carry over. I think this is going to carry over to the downside. And then this is the week where I think we get our big breakdown. Monday, Tuesday, I think we get a big breakdown. We could get a base rally on the 12th. We got a Harami inside bar and then a crush bar on the 14th, which is Valentine's. So again, I think we're looking at a lot of resistance here. So really kind of looking for the markets to try to get down in this 570, call it 572 to 577 area, because I think we're going to be looking at a pretty solid breakdown here. Okay, so QQQ, try not to spend forever on these charts. Really breaking down Let me get rid of this. And, let's take a look at this long term. So you can see we've got this very clean. It's hard to see through this rotation. Let me turn off the envelope and put this back up into scale. So again, you can see we are looking at a big, beautiful rolling excess phase peak pattern. Kind of hard to miss it. You can see it right across here. Big, beautiful rolling excess phase peak on the longer term, which would indicate that we have to defend this low, which is called the pullback low or the flag low. That would indicate that on a breakdown, we would be looking for a move down into consolidation, probably in this area, and then moving down to potentially an ultimate low, maybe back into this area. So on top of that, we have a nice little sideways secondary flagging pattern right here coming up off of this and rolling down into a secondary flag. Another little excess phase peak pattern that we've already broken down to. We're going to watch this level here as the breakdown, setting up just like the SPY. This breakdown here would likely move down to this area, consolidate, move here into consolidation, and then break down into this area as the ultimate low. So the blue pattern is feeding a breakdown level, which will ultimately be the ultimate low of the blue pattern will be the congestion area of the green pattern, the bigger green pattern. All of this works hand in hand to then play out, because as we get this ultimate low here, we're going to probably end up getting some sort of a rally up off of this, a little flagging, and then a secondary breakdown into consolidation, and then down to an ultimate low. So it will likely work as a dual stage type of pattern. We'll hit this resistance, this ultimate low, which is the resistance area. We're rolling around resistance. We'll probably get another excess phase peak pattern setting up to the upside, which will end up breaking down through another congestion phase and then into an ultimate low, which will ultimately be the green ultimate low way down here. Where we're at with this ultimate low could be anywhere across these, these key levels here, or I drew it down to this lower support level down here. Notice that I use the rejection point here, not the ultimate low. And then we have this level kind of right in here, which played right into my resistance, my consolidation zone. So, and that's because of where this flag is. So this flag indicates a flag low. A breakdown into consolidation would probably be down here near this low or this low. So I put it right between them. And then a breakdown below that level would put us right into this area or this area. You notice how I drew it, pretty much right at these areas. So I'm kind of seeing these areas as I'm drawing them. That's something that comes from experience. So again, looking for the QQQ to roll over, really looking for it to come back in here, go to hourly, looking for it to kind of just roll over. We may get a little rally today, rolling, and then, gone too far. Get a little rally today, rolling, and then by Thursday, Friday, I expect us to roll down into that kind of a deep low pattern. So, I really do believe we're looking at that rolling downward trend. This is an area where I think, if you're going to go long, good luck. I'm pretty much setting up for the breakdown move here into Thursday, Friday, Monday, Tuesday, Wednesday of next week. And I think that's going to be the big money move right down here. Big money move is this breakdown right down here, not the little rally that's going to go up, a quarter or a third of a percent. You still make money on it, but this is the move here. Basically setting up puts is what I'm doing, looking for opportunity, and looking for gold and silver to potentially rally. So we come back over here to gold and silver. We take a look at the gold and silver data. We're in a flat down pattern. Then we get this big momentum rally. So I've already it's in counter trend though. So we got to be cautious of this. We're in bullish trending, and this could be a pretty big pullback on a breakdown. We do end up getting a breakdown pattern here and a momentum rally, but I'm planning for gold and silver to do what I keep telling you, which is to extend a big rally up into this 3200 area. Okay. I really believe gold and silver are making this big move up into this expansion phase. And I don't believe that there's going to be a lot of downside risk here. I think it's going to be, as I've drawn, I think it's going to be fairly consistent to the upside. And I think we're going to get a very solid little rally phase here. So, given where we're at with this pattern, flat down pattern today, and we had the crush pattern yesterday. Well, we didn't really see the crush so much. We kind of saw it, that on Friday a little bit. We didn't see it yesterday. And where we're looking at here is I think we're going to be moving into a solid move up into this literally 2940, 2960 area fairly quickly, probably by the end of this week, I would hope. So I'm looking for a good, solid, continued melt up here, moving into a big breakaway mode, probably into next week for gold and silver. Now, again, gold and silver, we'll see how the momentum rally plays out tomorrow if we get it. And then you can see here, we got temporary bottom and counter trend mode, which should be a top. We got a stall, a gap stall, revert flush, which is a kind of an interesting pattern. It basically tells you that the market is capable of potentially gapping away and or reverting back to a mean and stalling out. So be aware that this is a pretty big, either a big day or a very minor day on the 11th. And that's right where my pattern is. We get that big breakaway downward move potentially in the SPY. Then we get a topping pattern in trending mode, then a gap potential and carryover, then another gap stall revert flush. That means that I think we're going to be looking at, essentially the market's trying to move aggressively and then revert, move aggressively and then revert. And that's what I think we're going to be looking at in the sense that, I've kind of drawn it here. Move aggressively and then revert. Move aggressively and then revert. So I think that's kind of where we're at in this mode for metals. And like I said, the melt up mode for metals is undeniable, really, at this point. You look at this chart, you look at this breakaway. These were, looks like something I moved, drawing for the Santa rally. So you look at this move here and this consolidation into December through the elections, the fact that we've rallied up out of it, we've gapped up into this expansion. I believe we're moving into this big expansion phase, targeting 4,500 in gold through the expansion phase here. And it's, again, I think it's just a matter of time. Let's put it this way. I would not want to be shorting gold very heavily through this uptrend. Maybe during some pullback areas, you can short gold very quick in and out type of trades, but the bias trend for gold right now is very strongly the upside, and I believe silver is going to follow through. Silver had a couple of good moves. You can see here we're starting to get back into that. Let's see, I've got 2 hours. You can see we're starting to get back up into that previous topping area back over here, 33.17, 33.20. And what's going to happen is we're going to have to break that level to get back up into these 35 area, which is coming. That's why I think gold is going to move higher and silver is going to move higher, because it's going to be hedging the risk levels that were prevalent before the election. Gold is already doing it. Silver is kind of slowing down, but it's going to be an explosive move. Both metals and miners right now are acting very solidly to the upside. So you've got a good opportunity with either metals or miners to the upside. And I think this fear of what Trump is doing is going to play out very well for metals overall. Okay, spread these out, get these back to kind of normal. And now we're going to go back and look at Bitcoin. Bitcoin is having a wild couple of days here. Let's look at this roll, this deep low that set up yesterday, and we rolled back up. Guess what, guys? Guess what? We look like we are moving into another big, beautiful excess phase peak pattern. So, as much as we want to see this carry, we're moving into another potential excess phase peak pattern setting up like this, which again, we continue to play these out. Here's the consolidation I marked. Here's the big breakdown coming down into this area. Let me get rid of some of these and some of this. So at this point, we're playing into this breakdown. We actually have an invert excess phase peak pattern here as well. So let me draw it. We come down low, come back up, and then here we're setting up our flag. There is the invert excess phase peak pattern. And again, we've had this fairly big breakdown take place. We're rolling through this excess phase peak pattern. And ultimately, where we're at, guys, is if we break this level up here. Oops, try that again. Better. Or this level here, which is to the downside. Then we are looking at a rotation right now in between this range. So we're going to be basically stalling in between 97,351. I'll mark it here. 97,350 and 102,500. And because of these excess phase peak patterns, and because of the broader term, we've already had the breakdown. We've already reached the ultimate low here. That's off of this pattern. So this one is complete, okay? Unless this moves into consolidation, which remember, we had this breakdown here. We had this move, breaking down. Yeah, I'm going to have to call this the ultimate low right now. So this is the ultimate low. And we could be moving into some consolidation here I'll have to look at this pattern. Let me do it real quick. Flagging. Low. I mean, yeah, I can see it. Can you guys see it? There's a deep low. We come up. Oops. I can see this as coming up to this peak, coming down to this area, flagging up like this, and then breaking down into consolidation. So I can see that being valid, and I can see this as consolidation, which would essentially be between this range here and this range here right now. Didn't really break. I mean, we're not clearly below this low with this consolidation, but I've seen this happen before. So it looks to me like Bitcoin is really going to struggle here, and is going to stay within this extended range, 92,000 roughly to 102. That's a 10,000 point range with a lot of volatility. I can tell you that, carrying this trend, or extending, meaning the downtrend, if I'm correct, extending this downtrend would mean that we would roll downward, and what's called invalidating the excess phase peak pattern, the red one, which would also be confirming the downward trend. Oops, come back over here. Confirming the bluish purple trend into consolidation and then maybe downward. So again, I think we're looking at this as a breakdown. I think we're looking at a general breakdown. Same thing with the markets moving into the lows. I can't imagine that Bitcoin is, suddenly going to find some strength when the markets are moving into this breakdown mode. I think it's ultimately Bitcoin's going to have to move through a downward cycle. And you can see we've been in this sideways pricing channel for months, since back here in December. And again, get rid of some of these lines, kind of looking for this breakdown level. Ultimately, I think we could be looking at this breakdown level down to about 70, 80, 75 to 85, 75 to $80,000 roughly. But what's playing out up here is really, multiple excess phase peak channels. We have very strong resistance playing out right here. In fact, I'll change this to more of a red color so you can see it as resistance. And that again is gonna, we came right up to that level, stalled and rolled down. We'll see how it plays out today. We're down $2,000 right now. I see it breaking downward. I see Bitcoin breaking downward as we move into this late week breakdown, trying to target my deep V low around February 10th or 11th or so. Okay. Again, I'm planning on taking it easy today. I don't really see any reason to be aggressively trading, fairly long term. I may target one or two little sweet spot trades, nothing too crazy. Again, I'm really just letting the market settle here. I think we've got about a 24 to 48 hour, meaning by Wednesday, late Wednesday, Thursday, I think we're going to start moving into more serious trending. And between now and then, we're going to be kind of rolling through a topping pattern, kind of a congested topping pattern, rolling into a downtrend late Wednesday into Thursday. Okay, guys, go get some today. Let's make this a good week.